Hi, everyone. My name is Darren Coleman. I'm a Senior Vice President and Portfolio Manager with Raymond James in Toronto. And today we're talking to my friend, Michael Cirone. Mike, you're a cross-border attorney. You're based in Toronto, and you're a bit of a unicorn, kind of like us in the financial world, being cross-border specialists. You're one of the very few attorneys I've found who's licensed both in Canada and the United States, and you've got a specialty in working with families and business owners and executives in dealing with their issues when they have money and family on both sides of the border. So thanks for taking some time to talk with me today.
No problem, Darren.
What I wanted to capture is something that we saw that was interesting. We just had the presidential debates, at least the first one, which was a bit wild, to say the least. After that debate was over, Google and some of the other search engines reported that the top trending search was "move to Canada" after that debate, which was interesting. So as you know, both you and I specialize in working with people who they are moving back and forth, who they have family in both countries. I thought we could talk a little bit about not so much moving to Canada, that's an immigration thing, but people are actually wanting to leave. They're either American citizens or they have a US green card. And more seriously, if they do want to leave the United States and go wherever, that's a little more complicated than people thought. So I thought, just to add a bit more to that conversation, if someone is in the US and wants to depart for whatever reason and relinquish their citizenship or give up their green card, is it as easy as just kind of handing it in when you cross the border, or is there a little more to do?
No, there's definitely a lot more than that to do. Let's start with citizenship.
Mm-hmm.
So when a U.S. citizen decides to move to Canada from the U.S., they have to look at themselves and say, okay, am I going to Canada for long-term or short-term? If it's a long-term, do I want to keep my U.S. citizenship, which they can,
Yep,
and move to Canada, or do I want to look into giving it up and relinquishing their U.S. citizenship? So if they keep their U.S. citizenship, the benefits are they have the benefit of the U.S. government protecting them if any world disasters happen, that kind of thing. But the downsides are a lot as well. So they'll have to continue to file taxes in the U.S. no matter where they live.
right. Which, by the way, is different, right? Because Canadians, if we leave Canada and follow a pretty described process, we actually stop filing Canadian taxes and stop filing Canadian tax returns, right?
That's right.
Because we can become non-resident and that ends our tax obligation. But Americans are taxed on citizenship. So it doesn't matter where they live, they have to file and have to potentially remit taxes for the rest of their lives, right?
And on top of that, that's right, exactly. On top of that, once they come to Canada, as you had said, that now they're going to become a Canadian tax resident, and they're still a U.S. taxpayer as a U.S. citizen. So they're going to have a lot more filings than they were used to as just a domestic U.S. citizen.
Right.
Right. So that's so one of the big cons and why people think about giving up is because they don't want to spend the annual tax compliance costs to come along with keeping a U.S. citizenship but living in Canada.
Right. So let's say they've got we'll deal with citizenship. They'll come to green card in a sec. So they decide, I'm leaving the United States. I'm going wherever, maybe Canada, maybe somewhere else. What do they do? Is it just a matter of having a meeting at the consulate or at the border and handing your passport over, or is there something else they need to be mindful of?
Well, definitely there's something else. So the immigration part is one thing, but definitely tax is a whole separate area. They do interact, but it's a totally separate area. So yes, you can give up your U.S. citizenship, you go to the consulate and give it up that way, but you still have the tax obligations to look at. So what you have to look at, the main thing, is what is called a covered expatriate status.
Okay.
So and it has to do with an exit tax too that could be payable by you when you leave the U.S. So there's it's a complicated test that you have to look at to see if you're considered a covered expatriate. Just the high points. There's a net worth test. If your net worth is over $2 million worldwide, then you could be subject to it. There's another test about have you paid too much tax to the U.S. over the last 3 years or 5-year average, sorry. And also there's are you compliant with the IRS? So there's a pretty complicated test to go through our analysis. If you come out of the analysis and you do come out as a covered expatriate, then you're subject to the U.S. exit tax, which is a deemed disposition of all your assets, and you pay tax, the capital gains on that amount. There's a bit of an exemption amount, but if you're fairly wealthy, you're going to be paying an exit tax leaving the U.S. So that's one of the bad. Another thing is if you're a covered expatriate, on top of the exit tax, you're also going to be subject to all these other rules about once you come to Canada and you make gifts to certain people, they're going to continue to tax you, right? So look, you know, and the $2 million net worth test, you know, we can plan around it. There's ways to gift amongst spouses or family members. There's some planning there to decrease you under the 2 million. But if you're, you know, worth you know, 10 million or 20 million worldwide net worth, then maybe, you know, you would be subject to exit tax. In that case, you would just keep your citizenship, and that happens a lot. Citizens will move to Canada, they'll keep it, and they'll just do those, you know, cross-border tax filings, and that's the end. I mean, the other downside to keeping it is not only you have to do your tax filings, but you're also still subject to the U.S. estate tax on your death, gift tax if you make gifts. So you're basically still subject to the same tax and transfer tax regime as you were, you know, before you left the U.S. On top of that, you're also subject to the Canadian regime. But so that's the U.S. citizens part of it. So definitely you need to look into that in more detail to see if, you know, you should give it up, and for tax purposes and for other purposes, obviously.
Yeah, so there's a lot to go through. So, you know, I know even when Trump got elected, there were a lot of people going, I'm leaving the US, I'm not coming back. And it's one thing to act out of emotion, but yeah, once we actually take clients through, this is the process. It can be very expensive, and many people can hit that 2 million number, because they'll also include things like the accrued value of a pension plan and other things. So it does capture a lot more people, especially if they haven't done any planning, right?
Exactly.
So now let's move to the green card holder, because that's another one where someone like a Canadian is working in the United States, and many of them, for example, now they're not even in the US. They're doing Zoom and working from Canada. And they may go, look, I don't want to be dealing with this anymore, and maybe I never go to the United States after this. So how do they relinquish their green card? Do they just tear it up and it's all done, or do they have another process like a citizen would have to go through?
Well, it's actually a little more cumbersome because the way it works is you know, people think that you can just either let it expire. I get that all the time, that my green card's expired, so it's no longer valid. But that doesn't make, you know, it's like a license. Your license expires, but it doesn't mean you can't drive. You just have to renew it. Still have one. Right. Right. So you know, expiration doesn't get rid of it. You have to take positive steps to get rid of it for immigration purposes. But then on top of that, you actually have to take positive steps on the tax side to get rid of it. So let's go back to talk about, you know, I want to give up my U.S. green card. You know, I've been in the U.S. for 10 or 15 years. You know, so what do I do for tax purposes? So what you have to look at is the first test you have to look at for this is called the long-term resident test. So you can have a green card for 3, 4, 5, 6 years, leave the U.S., give it up, you're okay. There's no adverse tax consequences. However, if you meet the long-term resident test, meaning you've had the green card for 8 out of the last 15 years, then you have to go through the same U.S. exit tax analysis that a citizen will go through.
Wow.
And keep in mind, another thing people don't realize is that when I say 8 out of the 15 years you had to have your green card, 1 day physically in the U.S. counts as a year. People don't know this. So someone got their green card on December 31st of 1 year. You know, 10 years, 1 year, right? And then they give it up on January of another year. That counts as 2 years, even though it's only 2 days.
They could also trigger, sorry to interrupt, they could also trigger that if they were just transiting through the U.S. as part of an international journey, right?
That's right. That's right.
Like I could be flying from Japan, it lands in LaGuardia, and I connect to Toronto. I'm technically, even though I never left the international part of the airport, I'm still in the U.S. for that 1 day, and that's now a year.
Exactly.
Wow.
Yeah. So again, if you got that, you know, 8 out of 15 years, the last 15 years, you've had a green card. You know, whether it's 6 years plus 1 day in December that you got it, and, you know, it could be 6, but you know, let's, you know, look at 8 years, then you have to go through the test and say, okay, I want to give it up. You know, what is my net? So then you have to go through the covered expatriate test again, just like a citizen. Right. You know, what is my net worth? Is it over the threshold or not? You know, have I paid too much tax over the last 5 years? Have I been compliant with the IRS? So you go through all those. And again, if you're, you know, you fail one of those tests, you're going to be subject to exit tax.
So now, so we've covered the American who wants to leave. We've got the temporary American with the green card, the Canadian with the green card who says, I want to give it up. There's one more category that we encounter fairly frequently, which is the accidental American. which is the Canadian who was born in the US but has never perceived themselves to be American, never got a passport, doesn't think they're American, has never filed a tax return. Do they ever have to be bothered with this, or just because fluke of birth or whatever? But if they've never lived in the US, if they've never perceived themselves, they've never filed a tax return, never worked there, do they have a problem or not?
They definitely do. And I get this all the time. And unfortunately, I'm the bearer of bad news to a lot of clients where we, are you a U.S. citizen? Yes, I am. Is your spouse? No. Okay. How about your kids? No, they're not U.S. citizens. They've never had a passport or all this other stuff. And the truth is, it has nothing to do with that at all. It has to do with what the rule says. The rule says if you're born in the U.S., even for a day, you're a U.S. citizen, period. Even if you move, right? So you're born there, you're a U.S. citizen. If you're born to two U.S. citizen parents, say in Canada, you're still a U.S. citizen automatically. And the third category, which catches a lot of people that they don't know about, they don't realize, is if you're born to one U.S. citizen parent, depending on how long the U.S. citizen parent lived in the U.S., it's normally, how many years they lived in the U.S. after their 14th birthday. It depends on the year of birth of the child. So there's different rules. But basically, if you meet that test, your parent, is in the U.S. till let's call it 25 years old, then moved to Canada. Even though you're born to just one U.S. citizen parent in Canada, you're a U.S. citizen.
Surprise!
And you can't give it up until you're 18. So the child will have to basically keep it till they're 18, then decide after that if it's something to look at to give it up. But that creates a whole set of planning issues, because now you have kids that are U.S. citizens where the parents didn't think they were. So now you have to look at, okay, when parents pass away, how do my U.S. citizen children, how are they going to inherit?
Right.
So that's a whole analysis too, because they're subject to the U.S. estate tax in the U.S. and gift tax, just like their parents who are U.S. citizens.
So what we're figuring out here is that this is way more complicated than I think most people expect it could possibly be. So I'm going to tie it up there, because I know we very quickly get on the rabbit hole of like what ifs and how abouts and all this stuff. But I think the key message is for those of you watching is that if anyone in the family's got a U.S. Exposure, you're probably going to need to talk to some experts to figure out what does this mean and what might I need to do about it, right? Because this is like quicksand.
Quicksand, yeah.
All right, Mike, thank you for your time today. I really appreciate it. Thank you all for watching.
Thanks,
and we'll be back again because Mike and I have a few more subjects to cover and a few more videos. So please keep watching, and we'll keep coming up with stuff because there's a lot to talk about when it comes to how the border creates some chaos and some confusion. So Mike, thank you. We'll talk again.
Thank you, Darren. Bye.